Good morning, Trinidad and Tobago, and welcome once again to the Bourse report. The FCB additional public offering is in trade. We have given you our outlook on that particular stock and the additional public offering. As well, we have put up our valuation perspective on the stock. It is essentially fairly well valued at this point in time. But today, I want to turn our attention to the TTNGL upcoming issue in a sense, but the results of that company for the year ended December 31st, 2016. Let's take a look at what is happening and the mixed bag of information and what one can we draw from it as we go forward. Well, let's now turn to our first graph. And we can see in this first graph that the share of profits of TTNGL from Phoenix Gas, which is its only holding in which it owns 39% of Phoenix Gas, has moved up. And you can see on your screen from here that in 2015, the share of profit was $136 million, and it has now moved to 164. There is one aspect in the results which needs some explanation, and it is this question of impairment reserve. The impairment, as you may recall, in 2014 was $1.1 billion, which is an adjustment to the valuation of the stock, which came into income. Some of that was reversed, of that $1.1 billion, $235 million was reversed in 2015, and just a smaller amount in 2016, some $17 million. So then, when you take all of these factors into consideration, the profit from 2015 on paper would have fallen from 370 to 179. What does that mean? The reported earnings per share before adjustment was 214 in 2015, 116 in 2016. But when you make the adjustment for that impairment reversal, when you look at the factor which is the operating income, if you want to call it that, the operating income per share grew from 88 cents to $1.04. And the dividend per share, very notable in 2015, $1.50, in 2016, $1.50 again. So what has been happening? For the period, the operating income, when you take away that non-operating, non-cash reversal, the operating income is up. So, but there are other issues that have to be considered with regard to the company. In terms of forward-looking, what we have seen is that when we turn to our next graph, what we will see is that prices in the first couple months of 2017 have been moving up from where they were about a year ago. Natural gasoline, as you would see here, 92 cents, up now to $1.10. Now that is, we are talking about today's figures, middle of March and so on. What we also see is butane up from 59 to $1. And what we can also see, this red line, propane from 40 cents to 64 cents. This is the basket of goods that is sold by PPGPL in which TTNGL had its shareholding. But notwithstanding this, what we have had in terms of a weighted basket is that the price over the year 2016 over 2015 is down from about 71 cents of that basket to 68 cents or 3.9% down. Notwithstanding this, what you can see is that as you look forward towards the end of the year, both volume and price went up, but it was not sufficient to adjust the average upwards, 2016 over 2015. Let's look at our next graph, and we can see in our next graph that there has been some other adjustments in terms of the exports. All of them have fallen in 2016 over 2015. Export of propane, butane and natural gas down by 21%, 27% and 20% respectively. So let's take some forward-looking statements as we go forward. What else is happening? What's the good news? What has been happening out there? Well, first of all, prices have in fact gone up, as we said, in the first quarter of 2017. So when we look at some of these factors, what we are seeing is an increase in the gallons in the last quarter of 2016. What we are seeing is that in terms of earnings per share, an increase in the last quarter of 2016. All of these are pointing to, again, when you look at natural gas prices per gallon, 84 cents up 2016. You can see all of this at bourseinvestment.com on our website. But very quickly then, what is the outlook? At the current price of $22.61, TTNGL has a trailing PE of 19.5 times, somewhat high. But a dividend yield, it's the highest yield on the exchange. That is the dividend over the current price, 6.63%. And as I said, that's highest. The cash position of the company, again, very sound, $366 million, which says that it has the capability to continue to pay in the near term good dividends of $1.50, because this cash pool is about $2.36 per share. On this basis, we consider several aspects: a high trailing dividend, a healthy cash position, stabilization in terms of pricing and volume and revenues for the company going forward, with the expectation of higher production of gas, which feeds into the TTNGL story, as well as some stabilization and improvement in price. And therefore, on that basis, we continue to maintain a buy rating for the stock. Look for us and for our other information, Guardian Holdings. It's up on our website at bourseinvestment.com, as well as our valuation of FCB and other aspects that you will see on our website. Look for our mutual funds in the newspapers, our various funds under Bourse and Save Invest. Have yourself a wonderful investment week, and if you need any information from us, give us a call at the numbers on your screen. This is Subhash Ramkilawan for the Bourse Report.